I'd like to start with some brief economic review, what's going on right now, what was going on in the past. And I'm always using the economic environment or real estate economic index, which shows the real estate economic index for the 6 most important or the biggest real estate markets in Europe. And this indicator is based on the most important real estate relevant hard facts. And as you can see, it starts in the beginning of 2008, right after or within the financial crisis. And the real estate economy indices were pretty much grouped. But as you can see later on in the years thereafter, the different indices, they moved apart and shifting focus from especially to Germany as one of the markets with the biggest real estate indices. We can discuss this later on. But looking to the right-hand side, you can see a sharp decline. That's where we are right now, or a few months ago. And the real estate or the very good sentiment or situation we were in the last years, increasing investment volume and demand for real estate, especially in the logistics sector, the situation dropped dramatically. And as you can see, this was just a short decline. The situation improved in the last month again. We could discuss this later on. This is just a very brief situation. If we could shift the focus to Germany, I would like to show a sentiment indicator showing the different asset class and how it's developed since the financial crisis and what's going on right now. As you can see, it's again starting in 2008 with very sharp decline. And if we think back of the situation in those years, especially in Germany, the investment market was more or less the logistics sector was still a niche segment. A hotel was not such a topic as it is now today. It was just mainly grouped around office, retail, and residential. And you can see it's drifting very different apart, leaving the residential market safe haven for the German and European investment market. And as you can see, for the last few years, the retail segment dropped because, of course, the pressure it's becoming from the e-commerce sector. But I'd like to point out that the logistics sentiment, it's more or less like the office and the residential sentiment on top of this diagram, and you can see how it developed in the last few months. During the lockdown, the German sentiment dramatically fell down to it was a sharper decline than in the financial crisis. But as you can see, the logistics sentiment was still high on top, and for a few months it was on top. Now the residential segment is they're struggling which one is on top. But office or hotel or retail, they are still they don't have the investors, the people, they don't have much faith in those segments until now. And I'm pretty excited to see the new figures coming out next week, but still the sentiment is right on top. As you can see, what's behind the economic environment. You can see on the bottom this sharp decline in the last few months with the economic expectation of the companies, economic assessment of the situation. And still the outlook is very it's not very good, but there's again optimistic. There are different others indicators showing it as well. So they have faith in the future and that it will develop pretty good. Everybody knows the pandemic situation is pretty bad, but they have still an optimistic outlook. What are the drivers behind all the developments in the last years? I'd just like to put up one slide with the major driver. One of the major drivers is the economic situation, the increase of e-commerce segment. Just here with an example of the logistics floor space from Amazon, from the warehouses in Amazon, just in Germany. So it's a steep increase, which around 32-fold since 1999, and an annual growth rate from 18%. So it's very steep, and well, this is just a quick view on the network of Amazon, but I think I'll skip this and move to this slide. What is the situation we are right now? We are in a situation where everything is changing. Some drivers like e-commerce even got a new burst. It just increased as a driving factor. Other segments, just the automotive sector, well, it's not only facing the pandemic situation, but also a structural change from the combustion engine to the electrical engine. And here you can see the more bluish the color is, the more floor space people think they will develop in the future, and the more greenish the color, the more decreasing the floor space of different business sectors will be. What does it, well, in terms of rent developments, in Germany, we haven't, you might think the huge surge in demand would have a steep increase in rents. Well, they increased, especially because the land plots are got more and more scarce, and they have to react to this. But in contrast to office rents, they're still developing very flat. But on the other hand, well, let's skip this one. When you talk to people, and we did a small survey regarding this, what do you think? Will the headline rent decrease because of the pandemic situation? Most of the people say, well, maybe in short term they could drop a little bit, but most people say no, they will remain unchanged, or even they will increase. And you look, if you look further into the future, 12 months, 24 months, they say no, they will even increase because of the. It still is a demand surplus, and the industry is not able to increase the floor space which is needed. So in terms of investment market, in Germany, the logistics sector had a huge surge. Many investors were shifting their focus. Even a few years ago it started, but right now many see logistics investments still as a safe haven and resilient to the pandemic situation. And if you look to the 2020 figures, you can see up to now in the first half year, the investment volume was already half or nearly half of the volume from 2018 or 2019. So if you can double it by the end of the year, then it would be possible that it will just remain some kind of regular investment year. Now I skip this one because I will shift to the discussion for the yields. You might say, what is the yield situation like? Do you think about the pandemic situation that the demand of investment demand will drop and the yield compression will slow down? No, in contrast, many think the yield compression will go on and the yields will decrease further than in the last years. Well, not in such high amounts, but still they will drop. But if we look to the yield gap, it's still has a benefit or a surplus or a gap to the yields you can achieve in the office segment or the retail segment. And of course, if you look to the riskless interest rates, government federal bonds rate, you have still a gap of 450 basis points. So that is a situation we are just facing. A quick view around the situation and what many people of the industry will think about what's going on in the near future.